Welcome back. Still tuned into Midcap Radar. This is time to get in a corporate conversation. Garware Technical Fibres posted a good set of earnings for the fourth quarter. The company's fibre and industrial product segment witnessed good traction, and the management also says aquaculture demand in markets like Chile and Scotland aided their quarter four show. They saw an improvement both on a YOY and on a quarter-on-quarter basis. To discuss quarter four performance and the demand outlook, we are now joined by Vayu Garware, who is the chairman and MD at the company. Mr. Garware, good afternoon. Thank you so much for joining us. Well, aquaculture, which is the biggest part of your revenues, continues to do well. In your commentary also, you said that Chile and Scotland were the two geographies from which newer customers and demand for newer products really aided growth. Can you tell us what was the incremental growth from these two geographies? What is the outlook just on aquaculture segment in FY24?
Yes, good afternoon. Thanks for having us on the show today. F23 was a slightly mixed year for us. So we had started off a little bit difficult. We had some logistics issues in the first quarter, which meant that some of our high margin products for aquaculture got delayed in terms of dispatches. And aquaculture has been very strong in Chile and Scotland, particularly because we launched some new products which have had excellent pull from our customers. They are allowing customers very big savings in the application in the way that they use them. On the flip side, though, we have had a bit of a flattish period in the Norwegian aquaculture side. There's been a external new tax being imposed by the Norwegian government, which has slowed investments down from some of these customers. However, in F24, that tax issue has now been resolved, and it looks like we should see return from the Norwegian market as well, as Chile and Scotland continue to be very strong. So we're expecting this quarter looks quite good, and we're hopeful that in F24, a lot of these things will come back on track. The logistics issues are now resolved. And also in raw material, we've had some benefit because the oil prices have gone down. So we hope that that'll also work out.
So you have seen a 10% growth in FY23 in your revenues. You speak about more demand coming in from Chile, Scotland, the Norwegian issue getting sorted, the tax part that is. In that case, what will your growth look like?
We don't actually give forward guidance on growth, I'm sorry, but we are the coming quarter is looking good, and we do expect that it will continue to be quite strong. In F24 should certainly be better than F23.
Vayu, I remember in Q3, you did face some delays in your international orders, particularly from sports as well as industrials. You had attributed it to the weakness in Europe and USA. Could you give us an update on whether that's still prevalent, or have we seen that pick up?
No, actually in Q3 and Q4 of this year, a couple of our large distributors were destocking. I think, they had some visibility on a recessionary trend. So they were reducing their stocks. That has also now reversed in Q1. They have started ordering again. I believe they have corrected their stocks sufficiently now. So that is also looking good and adding to our Q1 positive outlook.
Give us an indication.
It looks like it's back on track.
So April and May, 2 out of the 3 months are done for Q1. What is the growth rate looking like? Since there is that pent-up demand, coming through from the distributors as well, as the destocking has come to an end and they're restocking now, and aquaculture continues to be strong.
Yeah, so there are many different segments in our company, obviously. So, but overall, we would expect high double-digit growth.
High double in Q1.
Yes, and we'll hope that continues. We'll see how that goes.
Okay.
Okay, all right. We take that point. And you also briefly mentioned how crude prices have been going down. That's a major raw material for you as well, the crude-based additives and crude derivatives as well. In that case, what would margins look like? Do you have to take any, are you able to take any price hikes? So will FY24 growth be aided by volumes or realizations?
No, we expect our margins to continue. We are, around 21% EBITDA margins, and we are able to maintain that. We do pass through crude prices, raw material prices, but generally with about a quarter's lag. So, it will stabilize. If it goes down, of course, it's a benefit for us. So we hope that we'll be able to capture on that benefit.
But I believe your Q4 gross margins were lower compared to Q3?
That's a little bit of product mix.
Yeah.
Yeah, actually, that's a little bit of product mix impact. But overall, our EBITDA margins have remained, and Q4 EBITDA margins are quite good. They remained in the 21 plus range.
Okay. Now let's talk about the other plans, because the last time we had a conversation, there were strategic acquisitions that you were looking at, or at least strategic opportunities. Anything which is finalized in that sense? Any particular segment you are looking at? Will it be aquaculture? Will it be sports? And is there a kitty that you've set aside that yes, this is the amount we would spend on an acquisition?
We haven't yet defined a particular kitty. We are fortunate that we are fairly cash rich. F23, actually, one of the highlights was we were able to generate a lot of free cash flow again. We are searching very actively. We have narrowed on a couple of opportunities, but they have not yet closed. Strategy-wise, we are definitely looking for some base in Europe. So that's a very key part of the strategy we're looking for. If we're not able to find an inorganic opportunity, then we will develop it organically. But inorganic may be a faster route. So we're looking for that.
Okay, inorganic will be a faster route. Otherwise, you'll be setting up your own capacity is what you're saying.
Yes, we will do something because our major markets are there. We want to be a bit closer to the customers for quicker service.
Okay. So what would your capex plans be like in FY24 other than this inorganic opportunity that you're talking about? Anything that you're looking to expand generally as well?
Yeah, we roughly about 50 crores would be our capex plan in 24. It was a little bit less in 23, so we will look around that level for 24. We're a textile process, so our capex can be more modular. In the areas where we face some constraint, we add our machines that we require to debottleneck, things like that. And there's a constant drive in our plant on productivity and utilization. So that roughly would be a reasonable capex for us for this year.
Vayu, have you made any long-term growth plans for the company? Do you have a 3-year, 5-year aspiration, any strategic redirection, just the big picture? From you this time. We always end up talking about the quarterly numbers and the nitty-gritties, on a monthly or on a quarterly basis. But if you could give us, say, a 3-year, 5-year vision for the company, where do you see it headed?
So we are actually finalizing our next 5-year strategic roadmap. And largely on the organic platform, we will look to double over that 5-year period. And then, of course, we'll look to add some inorganic opportunities over and above that.
Okay. All right. Mr. Garware, it was a pleasure speaking with you. Thank you so much for joining us and enlisting the plans that you have going forward and your plans as well. We'll slip into a short break now. On the other side of this very short break, we'll put focus on some stocks that we are tracking for you.